Okay, so now I'm going to go practical. So I'm going to research Microsoft as one, and I'm also going to research Microsoft because it's easy to research and will save me time. All right, so I just went into search for Microsoft like you would do on any other platform you're using. In this case, I'm using IG. So I just go to Microsoft. So somebody tells me, "Oh, Microsoft is good. It's good. The price is running, and it's going on very well." First thing, you pause, and you find out what exactly do they do. So you can go here to the market data, okay, as you would, and you check the description. Please, this is very, very important. You need to read up what they do, okay? So here in this case, Microsoft is a technology company, develops licenses for that, and again, the company products include operating systems, cross-service. We know what Microsoft does. It's an easy one, so I will not need to read through everything. It's a household name. We understand the business that they do, but it's good sometimes to read in tablets, gaming, entertainment, consoles, phones. As you can see, intelligent devices. You can see a whole spectrum of what they do here. A quick summary. First, what they do. I'm happy with the business. I know the business. I know this is what they do. Is the business now for the future, past, or is it present? I know that it's the present, and also the future, because right now everyone is using the company. Okay, so everybody's using the Microsoft products. Teams is one of their products that they do online, and we use them at work as well. Microsoft Excel is the first go-to for any Excel, any spreadsheet, Word, and so on and so forth. So everybody's using it today. Anybody running a business now is either OneDrive to store their data or Microsoft. Xbox is in almost every child's home now around the world. They have an Xbox, well, most homes, and all provided by Microsoft. So it's a huge company, great. So now the next question I'm going to ask again is, go back to my list, is just use this instead of the slide. What are the fundamentals of the company? Okay, so very quickly, like I know this at the back of my head, so I'll just run with it. So I now check first Microsoft before I get into the news. Forget all that blah blah blah. Forget the sentiments for now. Check their fundamentals. Straight away, I go to the fundamentals. So I check here and I see, oh, the market cap of Microsoft is 1.6 billion, which is about $1.6 trillion. Okay. Their earnings per share ratio is that. The dividend is 0.951%. The profit margin, as you can see, is all singing and dancing nice because it's all there's no red. I will show you an example that's red. Their PE ratio is high, which is their price to earning ratio. Don't worry, I'll explain. Dividends per share, the dividend record as of is going to be paid 20th of August. Okay. And their share outstanding is about 7.56 billion shares. So that's the fundamental. So to see a bit more, I click on that. And then now you hover your mouse. If I hover my mouse a little bit on it, it tells me it gives me a description of what dividend yield means, what dividend per share means. I know what the return on average equity means. I can see on the return on investment as well what it means. So you can read up just by hovering your mouse on it, the definition. You can see the line comes up. It tells me what it means. So as you can see clearly, I can check and say, okay, 1.6 billion market cap is strong. What does the market cap mean? Market cap is basically the price today multiplied by the number of shares they've sold to individuals. That is the market cap of the company. So as the share price goes up, multiply that by the number of shares sold to people, the market cap goes up. That's what market cap means. So if the share price drops, they lose market cap value, okay? So then I checked dividend yield, okay? Dividend yield is low, it's not too bad. It was 1.99, okay, fair enough. Yes, 1.99 per share, not bad. I also look, Apple is up again. That alert just came through, 496. The revenue is 4.143 billion. Okay, that's sizable revenue there. You can also see the earnings per share. So what this means is the earnings per share. So every single share that they have, what is the earnings? So they say here, in this case, they're adding $5.7 per share. This is the basic. They have interim, they have the fiscal year. Fiscal year is 5.76. They've added onto the share price for that year. Okay, so you can see that there clearly. Then you have other ratios as well. There are debt to equity ratio. See all the ratios here. Now, what you really want, and again, there are earnings per share. This PE ratio is a good one as well. So the PE ratio is basically the price to the earnings. Price to earnings. So price to earnings are the price of the stock divided by the earnings. We give you that. Is that the PE ratios? People are willing to pay 37 times multiples for the stock. Okay, so this is how much they're able to, the company is able to generate. The company is able to generate 37 times its earnings per share. Okay, if that makes sense. Okay, you also go to see the profit margin, 30%, not bad at all. If you have 30% of that on Microsoft, it's not bad. You can also go down to the earnings before taxes, deductions as well. It gives you a bit more definition here too as well. Their price to cash flow, earning ratio. So I would not dwell too long on this. Then you can also see the movements as well. Look at that, the highs and the lows for the year. For in the 12-month low is in 132. The high for the year tells you the percentages: 12 weeks, 26 weeks, 5 days, 52 weeks. So in 52 weeks, which is a year, it's up 54%. Okay. So quickly, I can see that from the for me from the analysis here, you can quickly see that the company's price to earning ratio is good. Their return on investments is fantastic. It's about almost 40%, which is not bad. Their return on average assets as well is 15%, which is not bad. All that is really good numbers to me because they're all positive, even and they're double digits as well. And also their market cap high, but the market cap doesn't really tell me anything because it just says this is their share price, this is how much people have sold it to, and this is the price. It doesn't tell me if they have money or not. Okay, so that's fundamentals. Okay, if that's clear enough, I just quickly move to the next. So I go back again. Now I want to check, do they have cash? And then the fundamentals. Now, very quickly, even if I look at the fundamentals very briefly when I'm checking, in like 5 minutes, looking at that alone, that is very sweet. That's like a beauty to me. Because when you see that, the income statement is very strong, their balance sheet very strong, and their cash flow very strong. So straight away, I'm looking at their balance and go to their income statement now straight away. Okay, so income statement, what does it tell you? A lot of numbers, but look for just this, for the income statement. Check year on year, the revenue per year. 2015, 2016, 2017, 2019, 18, 19, 2020. You can see constantly on the rise, okay? You can see the total revenue on the rise, okay? You can see the operating expenses as well, which is standard, every company would spend. Their income before taxes as well, you can see that is steadily increasing. And remember, this is in millions. So you can also check out their net income, which is where you want to check. Go down to their net income as well. You can see that on the rise. Then you come down to the diluted net income. Steady rise as well. So that's all positive to me. No issues there at all. And you can always check the units, because if you're looking at some companies that are Japanese or Chinese companies or not traded in New York Stock Exchange, that would be in the different currencies. So always check to see what it is. Okay. The next, I go to the balance sheet, which is absolutely where you really want to go to. Income statement is fine, but what's on the balance sheet? What is left? Okay. So first thing you want to check is, look at that, is annual and there's interim. So on the annual basis, so this up until June 2020, first thing you're looking at here is you're looking at the total current assets. Then you look at the total assets. So first, total current assets, the build up. But this is where you want to go. Total assets. Always look for the total assets. Total assets, as you know, assets are assets. Assets are basically, I just put assets are not liabilities. Assets are things that generate money and value to the company. Okay, so here you have, as you can see, the total asset is growing year on year. Okay, then you want to now check their liabilities. So you have current liabilities, you have long-term debts that they have, and then what you want to see is the total liabilities. So the difference between these two should be positive. Okay, so their total asset is 301, and their total liability is 108 million. Okay, so you want to know that the difference between both should be positive. If their liabilities, of course, are more, then of course it means that the accounting is negative. And then you can see that very clearly straight away in total equity. So their total equity here is 118. Okay, that's very clear. So it's positive and it's good cash. Okay, but that's just the balance sheet. So that tells me straight away that the company is healthy, but I want to know the cash that they require to run the business. Now, it looks like a lot of numbers and you see some reds, but easy, calm down. What you want to look at here now is you also want to check the annual. You can also check the interim if you want. Okay, you can check the annual. Interim, as you can see, is just quarter to quarter. If you go to the annual, you can see it's year on year. Okay, so if I'm on the annual, just see how well they've performed over time. Now, check this out. This is up until they've got it to June 2020, so which is not bad. What you're looking for your free cash flow. Now, this is cash flow, which is all the general blah, blah, blah here, but you're looking for the free cash flow. The free cash flow is always the operating cash of the company subtracted from its capital expenditure. Now, that particular cash, free cash flow, the difference between this capital, the operating cash, and the capital expenditure, the difference between that is the free cash flow, which is what they use to run the business, pay their shareholders as well, dividends and all of that. So they have more than enough cash to run the business. And as you can see, they've had positive free cash flow over time. Okay. So once I see this, especially free cash flow, and that's what most times people use to evaluate or value a company. Once you see a free cash flow of this amount, I mean, that is a healthy company, which means they have a lot of money to run the business. So straight away, I'm happy with the finances. I'm happy with the fundamentals. So to me, it's a strong company straight away because of the cash flow. Now, I'm through the cash flow. I also now want to go again and check what next am I supposed to look at. Now, the price action. So even before I just know, even if I look at before I go to what the price of the company is at all, you just want to check that balance to know that the company is balanced. So Microsoft, and I look at the price action. Okay, so let's see what's the price. Wow, I would have bought them here because that's really cheap for a company with such a strong balance sheet and free cash flow. I would have bought them at 140. Okay, now they're 213. Is it still cheap to buy? Is it worth buying them now? It's a big question now. So you now ask yourself that question. Now you think about it. I put it on a daily chart. I can take that down to monthly chart. Check that out. That's their monthly chart. So what that means is that every bar chart, every candlestick you see here, every candlestick is a month. Now look at that graph. So let's look at the date on there. That date is on the 2011. It was $26. Check out the multiples today, $213 if you bought them in 2011. To me, it tells me the company is going somewhere. It's a no-brainer. Even if Microsoft is trading at $213, to me, it's still cheap, in my opinion. If I have more money, I will still buy Microsoft shares today because it's cheap. However, you ask yourself the question, do we then see, is there going to be any drop? Maybe there could be a drop. I could get them cheap. Or you can buy it on an average basis, okay? So I can say, okay, I'll buy Microsoft now, 213, and then when they drop to 200, I'll top up again. If they drop again, I could top up. If they go back up again, I'll top up. And I can buy it for the long haul because the company is a solid company. Okay, this is my own analysis. Remember, you would have to make the judgment call yourself too. So here, and I'll say, now what's the word on the streets? So the next thing I'm going now first, guys, just where I get some of my hot infos. So I go Microsoft. Can go to investing.com and so on and so forth. But finance is very cool. So here now I'm looking at a whole lot of info now. So I'm looking at the word on the streets now, yeah? So I'm checking. First of all, I like this part. This is a very, very important part, the holders. So you want to see who has what in the company. Now check out that. Now Vanguard Corporation here have got a total of 632 million shares in the company, what valued at 128 billion. You have BlackRock. They have almost 522 million shares of Microsoft. I mean, look at the names. The names on this company, holding the shares in this company and the value. And this is just what they've released. These are the top institutional holders. You look at mutual funds as well. And look at the worth of these mutual funds that have some of your companies have your pension funds hanging in here. Okay, and these are the values. So that tells me something about the company in the first place. For a company like Vanguard or BlackRock to have almost 522 million shares of Microsoft, that tells me a lot about the company. So you can see the breakdown here of who's holding what. Okay, then you want to also check sometimes the options, again, in terms of people who are trading the company, how well they're trading the company, what's happening, who's putting what in the company, and so on and so forth. One other important part, again, of word on the street, you can see analysts here. Yeah, and their revenue, sorry. on how they perform over year on year, summary graph as well. You can see steady growth. You can also check up a quick summary here too, but I always go to the holdings first. You can check a summary of it as well. You can see other competitors with similar market cap on what people are also watching. You can also see the latest news. If there's any gist that's recent on Microsoft weight buying, you can see all the news here. Sometimes I read this news and I tweet on them. You can see why is Microsoft up 5% since the last earnings report, which I just announced. This is 4 hours ago. If I like the gist in here now, which seems like a very interesting gist for me, I'm tweeting that as well. Back again. You also want to see some of the earnings per call. You want to see the earnings estimates as well. You want to see trends, what analysts are saying about the company. As you can see, your strong buy is still here and is still high in August, which is really good. You can see recommendation rating as well is high, which is 1.7, which is a strong buy. So I bought Microsoft at $199, $201, and it's up to $213. And I bought them just like maybe a week ago or so to top up or to add. But now I think I just bought more actually. So yeah, so you can see consensus, what the average price target, where they'll be. Because that average price target saying that Microsoft is going to be $226. Currently it's $213. Okay, guys, so that's an additional $10 plus on the stock. And you can see, well, it's the estimate of high. So guys, this is just simple word on the street. And then now, you now class it. Is it low risk, moderate risk, or high risk? Very quickly, you can say, okay, in this case for me, Microsoft is low risk. I can call it moderate if I want to. Depends on my level of where I want to place it. I can say for me, Microsoft to me, I'll say it's low risk because the company is the business model is solid. They are currently innovating and evolving all the time. The current issue with chat with people, especially corporate bodies, Teams has covered that already. In terms of online server and data, they have their OneDrive and it's working excellently well. I have OneDrive and it's working perfectly well, no issues at all. Because most of these things you use them. I have my Xbox, is working fantastically well. All their computers and systems, fantastic, doing great. Their money, cash, everything doing well. So now let's see if Tesla is healthy or not. I know there's a rave now for Tesla. Goodness, Tesla is it's an unbelievable company. What's happening here? Okay, anyway, so we can see Tesla. I'll take this down to daily or monthly. So we can see that. So that's price action, but that's not what you do first, please. What you do first is to understand what Tesla is about. So here, 3 lines. If you watch one of the videos, you see, go to the market data. First thing, that's what you want to do. Don't be blindsided by the price action, please. Check the description of the company, blah, 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 what Tesla does. We know what they do. As you can see here, the company produces electric cars, Model S, Model X, Model Y. They've not put the Y here yet. And they have Model 3 cars. They speak about briefly what the company does. Then you now go down to have a look at the fundamentals. As you can see, the fundamentals, you've seen some red already. Some companies are worse. You see a lot of red. You can see here that the market cap of the company is $303 billion. Okay. Its share outstanding as well. You can see the return on average equity is minus 14%. Microsoft was 40% on return. This is minus 14%. Okay. You can also see, remember, this is also when it was last updated. But check that out at the bottom as well. The 12-week high, 13-week high, these are price actions as well. So don't think these are price action as well, which is also there. But the focus is you're looking at operating margin is also there, not too bad. The EBIT, EBITDA, the EBIT as well. You're also looking at let me just see, number of shares outstanding is there. Market cap, the return equity is where you're keen on that. Revenue, 24 billion. Okay, so which is fine, not too bad. But you also, their loan to debt equity is long-term debt 175, which is a lot. Total debt to equity 202. So that's just one information. Then you now want to check their finances. Now look at that. Tesla was down, their income is low, still not generating a lot of income. Their total equity, their balance sheet is strong. And you can see that their cash flow, they were negative before, but now, because of the probably the rise in the price, the share price, they are now becoming positive in their cash flow. And that is a big, big, big thing. If a company starts getting positive in their cash flow, free cash flow, remember, we need to see the free cash flow. This is just the cash flow, but let's look at their free cash flow. Now, look at that. Tesla has been negative for a long time. And now, look at that, even negative here as well. But voila, they're now having their free cash flow now. This is 2019 December. If I check the interim, as you can see as well, too, they're also going down. They're still not, this is the interim, remember. So they are still not positive in their cash flow yet, which is sometimes a problem because you think they don't have enough money to run their business. Okay. But if their share price keeps rallying up and people keep investing a lot into the business, they may have enough cash to eventually run the company. Remember, this is just June. You still have enough to run to the end of the year. But as of last year, they were positive. Remember, it's the operating cash minus the expenditure. So you don't have IG, you're on the web. So let's see if we can find it on Yahoo Finance. Okay, so if we go to Yahoo Finance, we go Tesla, and I check Tesla, and I want to see the fundamentals for Tesla. I would also check here and see their financials. Okay, this is all free. So financials, quickly you can look down. So for financials, income, balance sheet, cash flow. Guys, are you with me? So you see it's exactly the same in IG. It's not hidden. And so the income statement, you can see their total revenues. You can see their net income. See, they've been negative for a while, positive here now. Then you also want to look quickly at the balance sheet to see what is their total assets minus the liabilities. So you can see total assets is 34. You can see total liabilities 26. And the net, normally they should display the net. In this case, not shown, but 34, 26 tells me it's positive. And then you also want to go to the cash flow. So I'm looking for the free cash flow. And in this case, positive. So here, my Yahoo Finance gives you the free cash flow as positive, which is a big thing, which is really, really big. As you can see, negative cash flow, and it's positive. So Tesla is looking like a good company now. The prospects are seeming to be changing from what it used to be. So you can imagine if Tesla is growing, the momentum at which is growing and is expanding in China, which means Tesla, from my own indication and my own experience and what I know, Tesla could be hitting $3,000 very easily. Okay, because it's positive cash flow now. People are beginning to believe in the business. It's growing and it's expanding. And it doesn't just have the Tesla model. It's also got SpaceX and the rest of them. So I would not be surprised if Tesla starts to climb. Okay. And the question now is, why put Tesla as high risk, medium risk, or low risk? So the question now is to you, what do you think? So that's it in a nutshell. I hope it's quick, straight, because then you can also look, okay, let's go, let's just do one more. Let's just look at the sentiment and analysis. Let's look at people that have holdings in the company. Straight away I go to holdings. Now this is just one site, remember? Look at the mutual funds, guys, look at that. For Bally and Guilford to have stocks in Tesla, that's something. Yeah, 11 million shares, so on and so forth. Then you can also see top mutual funds as well that have, but you can see the volume is totally different from when you have Microsoft. Okay, Microsoft is, the amount of shares is heavy compared to you have on Tesla, but it can also depends on the number of shares that are out there in the market that are being sold. Okay, you can also look at some analysis as well. Okay, then I haven't spoken about the technicals, so I'll just speak about technical very quickly. And then we would close technical analysis. So I have the price action, technical analysis, where you now try to look at the graph and then perform some technical analysis with the graphs. So I will just do that quickly with IG. So here the graph is plain, but I have indicators I can add. So this is my list of indicators. All these indicators all have meaning, but I usually use MACD a lot, and I use pivot. I also use they'll come on the graph, so tick them on. I will use volume as well, and I also use relative strength index as well. So I will explain the layman's term to them. You can read up a bit more definition. So I'll change this now. This is the price action, but what this means for MACD is that whenever this is a moving average convergence and divergence curve. Anytime they cross, it alternates the change. So here you can see there's a cross here. Here there's a cross, is negative. The next cross is positive. And you can see the wider the graph, the two lines, the more the tendency that's going to go higher. For relative strength index, quite simple. When the line touches 30, it's oversold. When it touches 70 and even above, it means it's overbought. Okay, which means there may be a correction soon. It may dip in the middle, as you see here in the middle. Okay, and then volume just basically tells you the action going on in the market. You can see there are a lot of buyers in the market right now, and you have a lot of here in between sellers and so on and so forth. So I can see there's a lot of momentum in the market. There's also another indicator you can use, which is called momentum itself. So if we go to momentum, you can also see the momentum in the market and how it's trending. Okay, so as you can see, you can actually make your graph busy or you can make it less busy. That just gives you a bit of idea of what's going on in the market. If I want to go down to 10 minutes, just so I can see more, so you can now see the nitty-gritty of exactly what's going on. I would make my graph less busy. I would take out all these other ones just to show you my graph a bit and leave the pivot chart. So the pivot, which is one of the indicators I used, this one, pivot point, it tells you support and resistance, yeah? It tells you the support and resistance. Guys, it's not confusing. Please don't get confused. It just basically says these supports are the previous prices it's been to before. And then if it hits support, it means that it hit that point a few times and it's difficult to go past S2 or S1. And if it's climbed, it's found it difficult to go past R1, R2, R3. So these are different resistance points. So if it breaks past one point, it's going to hit the next point. If it breaks past that point, then it's likely going to hit that next point and be a resistance. So sometimes if it drops to a point like S1, you may say, okay, let me buy there because it's likely going to bounce back up from there. Or if it breaks out of R1, you may say, okay, let me buy because the next point is going to be there. And it may continue rallying up. But you see, all this is all lagging. They're all called lagging tools, yeah, because they're only reacting on the news. So your best place to check for price action or to see exactly what's going on is the current news, because the current news affects it. Because for instance, if you hear Lemox now, they've been tweaking the accounting system, it's been wrong. Trust me, guys, this graph can go from there all the way there very quickly, and all the indicators will react accordingly. So indicators, technical analysis, it has its role, it plays its role, but remember that they're all lagging tools. They all run based on the current information that is happening. So the best place to make your decision is the current news today, what's happening. Check the price action to see what's been going on over time, because no company runs smooth like a straight line graph. It goes up, down every now and then. And you check the fundamentals, guys, fundamentals and the business model of the company. Okay, I was trying to explain, so that's why it took a long time. But if I was analyzing this myself, it'd take me like 10 minutes. And I should be able to just quickly look at the company. So first, we go into questions, and then we look at some more companies.
Thank you very much, Ogechi. That was awesome.